Hello and welcome to this special segment called MC Pro Select Stock of the Day. In this segment, we bring to you fundamentally strong stock ideas that you can consider in your portfolio. So today's stock of the day is Central Depository Services Ltd. If we talk about the company, then it is the only listed depository. Duopolistic sector NSDL is the only other player. CDSL facilitates holding and transacting securities digitally in electronic form through demat accounts. What we like about the company, you may ask. Low risk proxy for capital market growth, key beneficiary of booming primary and secondary markets. The depository space has strong entry barriers. The incumbents CDSL and NSDL will continue to reap the benefit of rising penetration of the financial markets. CDSL achieved a significant milestone of reaching 9.6 crore active demat accounts in September 2024. If we look at the diversified revenue profile, then the three main sources of revenue are annual issuer charges, then the transacting charges, and then the IPO and corporate action charges. If we talk about the annual issuer charges, then they are regulated by SEBI-determined fixed fees charged to corporates annually for holding different securities, equity shares, preference shares, etc. in electronic form. The government mandated all private companies, including the unlisted ones other than small companies, to dematerialize their shares by September 30, 2024. This boosted the annual issuer charges in Q2 financial year 2025, but the opportunity of unlisted companies may not be as big as the listed companies space. In Q2 financial year 2025, CDSL added 3,428 companies and earned a total revenue of rupees 9.2 crore from these unlisted companies, and IPO and corporate action charges are market linked, and that doubled in Q2 financial year 2025 when compared to Q2 financial year 2024. Transacting charges depend on the volumes in the secondary market, and the transacting charges that form the largest component of the total revenue, 23% in Q2 financial year 2025, grew by 66% year on year despite the cut in the transaction charge with effect from June 1. The soaring volume would offset the price reduction. CDSL further reduced the transaction charges to Rs 3.5 per debit transaction. Earlier it was Rs 4 transaction to comply with the True to Label regulations that became effective from October 2024. The reduction will adversely impact earnings going forward. New business lines can drive further revenues. CDSL has employed its capital in the new businesses as well. CDL Ventures CVL provides KYC services for capital market intermediaries. CVL's net profit soared 96% in Q2 financial year 2025 compared to Q2 financial year 2024. CVL has delivered a net profit of Rs 66.54 crore in the first half of the current fiscal H1 financial year 2025, which is sizable. Other subsidiaries include Insurance Repository, holding of insurance policies in electronic form, and Commodity Repository holds electronic warehouse receipt. The IRDA has made it compulsory to issue all the insurance policies in the digital format, similar to how investors hold shares in a demat account from 1st of April 2024. As an insurance repository, CDSL is also poised to benefit from the digitization in the insurance industry. However, the progress on insurance repository has been very slow. Apart from CDSL Ventures, no other subsidiary contributes meaningfully to the revenue. However, these segments can translate into big revenue opportunities at a future stage. If we talk about the robust financials and promising outlook, the large number of IPOs and rising retail trading volume bodes well for CDSL, likely to deliver healthy revenue growth in financial year 2025 on back of booming capital markets. CDSL's main operating costs are employee cost and software development and maintenance cost, which are largely fixed in nature. And if we look at it, then it enjoys operating leverage that leads to high EBITDA margins as well. CDSL's minimal capex requirement enables it to generate strong free cash flows and healthy ROE, that is return on equity. The ROE in financial year 2024 improved to 31%. If we talk about the risk, then high linkage to capital markets, regulatory risk are there for the company. With that, it's a wrap. For more such updates, keep watching moneycontrol.com and please like, share and subscribe to Money Control's YouTube channel.